economic competition will get stiffer in this new era where countries compete for power and influence. Singapore will have to adapt quickly to these changes to survive and prosper in a troubled world. We will therefore redouble our efforts to attract high-quality investments. We will focus on growth sectors where we can be highly competitive. For example, we are a leading international financial center in Asia. We are a global trading hub with strengths in transportation and logistics anchored by our air and sea ports. We also have a vibrant manufacturing sector supported by key segments like electronics, chemicals, and biomedical science. These attributes and strengths will enable us to attract more SMEs to anchor their regional or even their global operations and headquarters in Singapore. With more high-value activities and best-in-class facilities based here, we will be able to build new capabilities, develop key industries, and create good jobs for Singaporeans. We will also create spin-offs for our local enterprises as they serve the SMEs based here, plug into global networks, and eventually grow to become industry leaders in their own right. But we must expect global competition for investments to get tougher. With the Base Erosion and Profit Shifting Initiative, or BEPS 2.0, on the horizon, we will have less scope to use tax incentives to attract new investments. Meanwhile, the US and other countries are rolling out vast subsidies to build up their strategic industries. It will not be possible for us to outbid these countries with even bigger subsidies just to get their SMEs to invest here. But neither can we afford to be complacent and simply take our competitive position for granted. We will therefore have to work harder to enhance our overall productivity and workforce quality to stay competitive in this new environment. We currently have the National Productivity Fund, which supports a wide range of measures for productivity enhancement and continuing education and training. I will top up the National Productivity Fund with $4 billion and expand the scope of the fund to include investment promotion as a supportable activity. We will use the fund to anchor more quality investments here. This includes supporting companies to build new capabilities, add greater value to our domestic ecosystems, and upskill our workers. And ultimately, these efforts will lead to better paying jobs for Singaporeans. Besides anchoring investments and deepening capabilities, we must nurture and sustain pervasive innovation across the economy. We have to push new frontiers and differentiate ourselves in quality and value. And this is why the government has consistently committed resources to R&D. We are investing $25 billion from 2021 to 2025 to catalyze research, innovation, and enterprise. We are restructuring and raising our game industry by industry through the industry transformation maps. Our efforts are bearing fruit, but innovation is not without risk, which businesses may find difficult to undertake amidst slower growth and higher costs. So to help our businesses press on with innovation, I will introduce a new enterprise innovation scheme. This scheme will significantly enhance the tax deductions for 5 key activities in the innovation value chain: R&D conducted in Singapore, registration of intellectual property, including patents, trademarks, and designs, acquisition and licensing of intellectual property rights, innovation carried out with polytechnics and ITE, and training via courses approved by SkillsFuture Singapore and aligned to the skills framework. Today, businesses can enjoy tax deductions of up to 250% of qualifying expenditure on some of these activities. I will raise the tax deductions to 400% of qualifying expenditure on each of these 5 activities, except for the qualifying expenditure will be capped at $400,000 for each activity, except for innovation carried out with polytechnics and ITE, for which the expenditure will be capped at $50,000. With these enhancements, businesses that make full use of the scheme could enjoy tax savings of nearly 70% of their investment. Some firms have yet to turn profitable and do not have sufficient profits to maximize the benefits from these tax deductions. To support these firms, I will allow businesses the option to convert 20% of their total qualifying expenditure per year of assessment into a cash payout of up to $20,000. This will help smaller firms defray the cost of their innovation activities, even if they pay little or no taxes. As our companies grow, we will support them in accessing capital to scale up and be globally competitive. A key part of this effort is to strengthen our enterprise financing ecosystem so that promising firms can tap on a wide range of private equity and venture capital funds, as well as financing from other financial institutions based here. The government has also been mobilizing investments in SMEs through Heliconia Capital, which deploys equity financing to SMEs and catalyzes additional growth capital from the private sector. To date, we have committed $1 billion to this effort and invested in about 60 Singapore-based companies. This has in turn catalyzed around $2 billion of additional investments into these companies. The total revenue of this portfolio of companies has more than doubled after this investment, and over half of them have developed new capabilities or expanded beyond Singapore. Given the positive outcomes, I will set aside an additional $150 million via the SME Co-Investment Fund. We will use this to invest in promising SMEs, and we will also aim to catalyze an additional $300 million of private investments to support our SMEs. We are also developing a healthy pipeline of enterprises with a strong track record of international success and the potential to move to the next level. In last year's budget, I introduced the Singapore Global Enterprises Initiative to provide such companies with more dedicated and customized support. I will now set aside $1 billion to provide a further boost to this initiative. Promising companies will be offered specialized capability building programs tailored to their needs. This could involve working with experts to strengthen the core leadership team, accelerate their internationalization plans, and build a strong talent pipeline. Enterprise Singapore will also support them to secure resources to execute their growth plans and to build sustained research and innovation capabilities so they can strengthen their value proposition and stay competitive. The Enterprise Innovation Scheme, the boost to the SME Co-Investment Fund, and the Singapore Global Enterprises Initiative are part of a wider suite of government measures to help nurture and develop our enterprises. So I encourage all our companies, big and small, to make full use of these measures to innovate and grow.